I'm excited about the content I have in this video. Watch my earlier videos, they're worthwhile. Now I want to start today by addressing this falling wedge. Now, that's what people have been calling it. I want to pull up some comments that I've been getting about this pattern. Let's see, this is what I want to do, is show this right here, I think it is. Ice T99804 asks, you really don't see the falling wedge breakout to Kingdom Come and the pullback to Hell for confirmation bounce? And the answer to that is no, I really don't. And there are reasons for that, and I want to go over that now. So I have the pattern pulled up on my screen on the 15-minute time frame. You're going to see those yellow lines outlining that wedge, so-called wedge. And I want to just take a moment and go to Bulkowski's website, thepatternsite.com, and talk about why this actually isn't a wedge. So I have the identification guidelines here. I'm just going to go through them, okay? So the price trend can be in any direction leading to the pattern. The shape, price follows two down-sloping and converging trend lines. That's all true, okay? And the price should touch each trend line at least 5 times. Okay, so we do have several touches, right? As you can see, I'll pull up a few arrows down. Like, there's a touch, and there's a touch. Maybe that's a touch. Maybe this is a touch. And then down here on the bottom, too, we have several, right? It just depends where you want this bottom trend line. It doesn't really matter. The touches are there, right? But here's the kicker, the duration. It takes 3 weeks to develop a falling wedge. 3 weeks. How long is this pennant? Or I should say, so-called falling wedge. 1, 2, 3, 4, 5, 6, 7, 8, 9-ish days. It's well under the 3-week period to develop a falling wedge. So, what's Bulkowski say? It's a pennant. Now, this is the thing. If you misidentify this pattern, you're going to be in a world of hurt, because the falling wedge is incredibly more bullish than a pennant is. And I'm going to explain why. We have some statistics here that Bulkowski give us that we can use to gauge how bullish the pattern really is, okay? So right here under breakout, Bulkowski says the breakout can be in any direction, but it's upward 68% of the time. That's a lot. A 68% chance of upward breakout is a safe bet, more or less, right? So that's why the falling wedge is such a fantastic pattern. Now we have a percentage beating price target, and for upward breakouts, that's 62%, and that's a lot. That means that you'd be taking the height of the pattern, which, you know, the peak was way up towards $34, right? Let's just see what that high was. That was, come on, 34.33. And with a low at 18, you're going to be looking at 12, you know, $16. You take 62%, $8. You're looking for an $8 breakout to the upside, which isn't even going to get you to a higher high. First, let's establish that even if this was the more bullish falling wedge than a pennant, that this breakout upwards would still only have a price target at a lower high. So let's establish that even the more bullish pattern still would form a bearish peak nonetheless. So you have a 62% percentage being price target and a 68% chance of upward breakout from the falling wedge, but this is not a falling wedge, it's a pennant. So now I'm going to compare those two statistics against the pennant. As you can see, the percentage being price target for a pennant on upward breakout is 35%. It's a lot less generous. You get a lot less of the height of the pattern applied to the breakout price. So not nearly as bullish a move coming out of a pennant. Now there is a chance that a pennant can work like a half staff flag and you have an equal run after the pennant, right? That only happens 30% of the time, okay? And after seeing the price retrace as much as it has, you just can't expect this to be a pennant anymore, okay? This is ridiculous. There's a rough Fibonacci retracement. I mean, just look at this. This is nuts. This is way below the 50% mark. This is beyond retracement at this point. So we have a pennant. It's most likely not going to be a half staff with a big bounce. And it's definitely not a falling wedge. So let's talk about upward breakout percentage chance for the pennant, okay? Let's see here. The breakout is upward only 57% of the time. So the wedge had a 68% chance of upward breakout. The pennant only has 57. And you only get about half as much rise out of a pennant. So no, I don't see a wedge. I see a pennant per Bulkowski's identification guidelines. And I'm going to go ahead and just run this analysis on the pennant. And I'll tell you what I get, and it's not going to be what other people on YouTube have been saying, but they've been wrong all week, I've been right all week, and that's kind of the point. So I'm just going to go ahead and run this analysis. So we had a high. I'm gonna pull up my calculator here. I should have done this before, but let's do it now. If you don't know how to calculate a price target, I'll be running through that really quickly. So we had a high of 34.33, okay? And what we're gonna do is subtract the lowest low, which happened on Friday close, which is incredibly bearish. And that low was 18.13. 18.13. So the difference is $16, okay? Now we're gonna take the percentage being price target and we're gonna multiply that. And that's going to give us a relative amount of the height to apply to the breakout price, which we'll just say is like $18. So for upward breakout, that's 35. Okay, so 0.35 equals, whoa, what did I do there? I did that wrong. Okay, so click, 16 by 0.35. There we go. So $5.60. That's what we're going to add to 18 to get our upward breakout. 2360. That's our upward target, is 2360, okay? That's what the pennant bullish breakout would be, 20, and it's not even a falling wedge. Pennant target. That's the first one. Okay, so let's per se we just get an upward breakout, we get a nice clean 1, 2, and 3 move. All right, I would expect to see that happen, and that would turn into this big like head and shoulder pattern, right? Yeah, that, I mean, it would take more than just this pennant pattern to build a price or to calculate a price target higher than that to a new relative high. So even the pennant says, hey, the next high is probably gonna be lower than that last high, and that's bearish. So now let's talk about the bearish target for the pennant, a 32% percentage being a price target. So let's see, we had $16, right? And we're gonna multiply that by 0.32, $5.12, and we're gonna take that off of 18, $12.88. Wow, now that's interesting because I'm looking for $12.90, okay? And I honestly haven't done this. I haven't done this calculation yet. So I had no idea that was gonna be $12.88, which is exactly 2 pennies from my V-top target, which is incredible. Yeah, whoop, way down there. And the reason why this is my target for my V-type top is because that began down here at 1290, and I'm expecting a complete drop down to this level. This is your pennant analysis. So no, I don't see a falling wedge with a bounce. And remember, the Fibonacci levels are only rules of measure. They don't provide any actual support or resistance unless traders, people, or algos are actually going to respond to them, and they don't always. And Bulkowski actually goes into detail why those fib levels aren't as important as you think in this book. Those Fibonacci retracement levels, more often than not, also happen to coincide and occur with peaks or valleys in past price action, and that's a more reliable way to find areas of support and resistance than the Fibonacci levels. So I think that calling this a falling wedge is incorrect. It's just definitively wrong. And I believe that when you do the analysis per the statistics, what you get is a result that is not bullish. Neither of these targets is really all that bullish in the context of what the price has been doing, right? I mean, if you could get to this upward price target up at 2360, that would be a higher low, right? But also a lower high. You'd have to see the price continue to run higher. And it'd be very hard to get past that resistance at 34, and the risk of double top is really high. So I see this as just this is not how I would analyze the price. Now, that said, I've been day trading this week, and that's really been putting my analysis to the test. I've been saying I don't think that we're going to see anything bullish anytime soon, and I like to put my money where my mouth is, okay? So all this week, if you didn't watch my past videos, you should go and watch. I've been talking about these day trades that I've been setting up, and every day I've been in my Discord just saying, hey, I'm opening a put, I'm closing a put, this is the contract I'm writing, I'm holding through this valley, I'm expecting a low for the run. So as Discord as my witness, these are my real trades. And you can see that I'm marking them as I go along here. And the price has just been falling and falling and falling. And on this day in particular, here to here, this is where a lot of people were saying bullish reversal. And I was like, no, not bullish reversal. There's been no sign of bullish reversal since that V-top at the very peak at $34. There has been zero evidence of bullish reversal. Zero. None. Downtrend. Big downtrend. Huge rejection. This is what a slingshot looks like. I remember earlier on, during these other really strong pullbacks in the price during this overall long downtrend, there was a lot of talk of a slingshot throwing the price really high, and that was wrong. And now we have a slingshot that's actually throwing the price back down. And I just think that people don't want to see it. People are seeing what they want to see. So here you can see the ultimate high of 72.63 over here on the left, and this nasty downtrend. It's huge. It killed the last run right there. You can see there was this incredibly bearish wick above there. Now we did have a big strong double bottom, and the price target was somewhere up here. But as you can see, the price has reversed and is now falling back down to these other important levels. The price is back within the trading range down here. Now, when the price started to fall through here, I said, hey, I expect some sideways action. I didn't expect it to be this long. And at the end of that, I was actually surprised to see the price come and test this trend line, though I did acknowledge that it could do that. So you can go watch that too. This didn't completely elude me. I was at the time not trading because I knew that this was going to be sideways, right? And I was just taking a break from it. And one of my followers said, hey, do you think you could actually consistently make money day trading on this? Because that's kind of the big test, right? Is my analysis any good? Can I make money doing it? And so I said, you know what? Let's put it to the test. And so that's what I've been doing this week. And I have some results from that I want to share. I'm going to pull those up. So this is my daily price action for me trading. And this has been a wild ride putting this together because basically it gives me a chance to look at my trading behavior and look at it objectively in a way that I understand, which is charts, right? So you can see I have a daily candle for each day, and I started with a small gain. On Tuesday, poof, big run up. Now this big run up emboldened me to take more risks on Wednesday and Friday, these two red days, and those were trash put days. And you can see that appetite for risk actually worked against me. So this $220 level of resistance on my chart is actually a reflection of my willingness to take on more risk as I have gains that I can afford to lose, which is really interesting to see, like a level of resistance and understand exactly why it occurred. And now you're going to see that there's some support here too. And it appears to be somewhat rising. It's kind of flat and it's just above $200, right? And the way I came up with the price is I said, hey, the biggest trade I started with was a $165 put contract that I bought. So I said, hey, at 165, that's going to be the cash I started with, and now all the money I make or lose is going to be added or subtracted, and that's going to be the price of $cap. And I'm doing pretty good. So I kind of think like this might be like a little flagpole. This might be a little flag. It's only 5 days of data, so you can't really tell. I do have an estimated moving average here, or it's a simple moving average, and it's just 2 days. So as you can see, it fell flat here at the end of the week, but I am up on the week. I want to show the Excel spreadsheet I built here for this. So this is what this looks like. I have my date, open, close, the difference in dollars, the percentage gain, and then my weekly gain or loss, which here is 20.84%, which is really good. I'm really happy to be up 20%, okay? So bearish analysis, or Bulkowski analysis, which was bearish this last week, made me 20.84%, which is really good. I didn't trade any calls, and I would have, but I have some challenges right now. The challenges are, one, I don't have a lot of money I'm using for this day trades, so that means I can't afford to buy good contracts like deep in the money puts, so I have to make more risky plays just because of the low amount of cash I have, and I can't short either because I'm using a cash account. Now if I had shorted the stock every single day, I would have made money every single day, but I can't do that. This gives you a clear idea of how well the bears are doing. The bears are doing fantastic, and people are calling for bullish reversal. I'm sorry, that's just completely wrong, and that was wrong all last week. And this is the proof. It's right here. Now, I was also able to calculate my RSI. I'm going to do relative strength index on my day trading. So as time goes on, I'm going to have chart patterns show up, I think. I might, and like trend lines on my day trading chart. And it's going to be really interesting because I'm going to be able to analyze my behavior as a trader in terms that I understand, which are chart patterns and Bulkowski analysis. I'm going to apply that to myself. So I'm definitely going to learn something. Oh man, and that's going to be really interesting. So you can see the equation to calculate the RSI is pretty complicated, right? And I did want to say that I actually learned how to do this by watching one of TD Ameritrade's videos right here with Cameron May. He's an education coach. He's a great guy, I think, at least judging by the videos. And you can go and watch this one yourself. I'll leave a link in the description. And maybe, you know, if you're following me and you're also day trading, you can start doing this for yourself too. So I have one more picture I want to show, and it was kind of clickbaity of me to do this, but I didn't really care. Let's see, do I have, oh, where, I wonder why I can't go left and right. There we go. One more. Or is it this way? There it is. This was the thumbnail for the video, right? AMC, technical analysis, big green candle with a wick. That wasn't AMC. That was me. That was me day trading. That's my weekly candle. My weekly candle is that green. Yeah, I've got a little wick, right? And you can see maybe that's like $10, maybe $12, but I mean, clearly I've got over $30, $35, $40 here in Rise, so this wick isn't all that bearish. It just says that, hey, I had a big run up and a small retracement. So we'll see what next week candle's looking like. I'm hoping for a big fat green one, right? And that would be awesome. So this is the beginning of me, just recording my trading activity as if it were a stock and actually calculating the RSI. It's gonna be really cool because I'm gonna have an RSI going, and oh, it's so nerdy. I'm so excited. It's kind of a lot of work, but that's okay. So there you have it. The falling wedge, not a falling wedge. It's a pennant. Price has been dropping really strong. The bears are making money right now. I'm day trading and doing well, playing puts. And now I want to cover some analysis too. So I'm just going to pull up Bukowski's page here, and maybe I navigate here to VTOPs, chart patterns, index, VTOP. All right, just VTOP, boom, boom. It's a pretty simple pattern. You go up and you come down. So the percentage mean price target is 37, which isn't great, right? But I think that's what we're gonna see as a completion of this pattern. Now, the uptrend, looking for the price to make a straight line run up with few or no pauses, often fitting inside of a channel. I mean, that's a straight run up, right? I mean, it really is. And let's go ahead and just clean up this chart a little bit. This is a trend line chart, so we're gonna remove this double bottom. And if the price can make a big handle, just like this needs to be said, if the price can manage to work its way back up to a few tests, all right, this is kind of like worst case scenario in my mind for trading, because the implied volatility is gonna be dropping this whole time, and there'll be like curveballs throughout here. Like each one of these turns is an opportunity to lose money day trading. But if that can happen, then that double bottom has a chance to make an upward breakout, and that upward breakout would be powerful. So I just need to say that, okay? Because that's basically what set up the 2021 run, was a big double bottom and that big handle that was the first half of 2021. So it is possible to see that too, but I really just don't see that in the cards. What I see is a VTOP, and we're likely to see that conclude with a low towards the low teens, okay? So the reversal there at the top of the inverted V will form a one-day reversal, island reverser or tail, usually on heavy volume. Well, we've got a tail. That is the biggest reversal candle ever, and that was some pretty high volume. That was some really high volume in there. Yep, that's okay, that fits. Now, trend line. After reversal, price pierces an up-sloping trend line. Okay, there you go. Drawn along the price lows, confirming the trend change. This is not a requirement, but an observation. So this is not required, but as you can see, when the price did pierce that first trend line, boom, the price confirmed the low with a much lower low. I'm gonna go ahead and draw another trend line through here, and this is gonna be for the full height, okay? So this trend line looks like this. Ooh, isn't that interesting? You can see that the price on Friday closed on that uptrend. Look at that. And if you were watching Friday, you know that the week ended with a spectacular dive down. It wasn't a bounce. It wasn't like the price found a nice level of support there. Let's go ahead and bring up the 1 minute here. Ooh, if you chart this on the 1 minute, you can actually see that as a confirmed breakout down. You can see that as the price pushed below, it came back up to test that breakout price, reversed, and set a lower low. So this would, on an intraday chart, on the 1 minute chart, indicate that that was a full breakout. That's pretty small. We're probably going to pull back up to that line one more time before we see a true move down lower. But if we do see this trend line break, it's going to be like vertical run downtime. Even on the 15 minute, that looks pretty good. I really wanted to go into the 15 minutes to get a little more definition down here. You can see when you chart on the 1 day, you don't quite get it right. So if you can just give yourself a little bit more. And here's some pipes. So I'm going to draw 2 of these because it's possible that that's the best trend line right there. You can see how that cuts out the bottom of those pipes, and that's the midpoint of one of those candles, which I find to be a pretty reliable way to draw a trend line off of pipes. And you know, these tails are long, so maybe even that second higher trend line, that's the more true trend. Let's go back and look at that over here, and you can see, yeah, that that looks really good. Let's go ahead and zoom way in, and yeah, there you go. You can see that this trend line was important, held the price up a little bit as the price fell down towards through 19 down to the 18s, but came up, tested it, failed, hit the bottom, found support, boom. This is incredible. And then that clean break and rejection down. So yeah, to me it looks like the bears are done obliterating that level of horizontal support and resistance. And if we zoom back out into the 15, where's the next big support? You know, like 1578-ish, somewhere around there, right? Maybe a little higher, maybe right there, maybe at 1630. But that's going to be a big drop, you know, another $2 drop. And if you look at the daily chart, and it's very possible we could see that happen in 1 day. You know, I'm talking about seeing another candle that, especially if we gap lower on Monday open, that another day that could just be another $2 drop like that. And this would be the beginning of our vertical run down. And it would be probably 3 or 4 candles that just look like this, and they just reach down and down and down until they reach, you know, the ultimate low, which might be, you know, $12, and there might be a wick there. So that's what I'm expecting, is just to see a continued precipitous fall off of the price. I mean, the RSI isn't slowing down at all. And the volume has been actually pretty high in the downtrend, above the 30 period average, which is impressive given that there was this much volume on these big green days, right? And if you look at the run up, there was even under, you know, the volume was relatively comparative. So the amount of volume that pushed the price up like this is now taking the price down. And there's probably a ton of shorts entering into positions here, and that's why that volume is so high. Probably also here as well, towards the peak, towards the end of the day, probably. And so I would expect to see that short selling increase or bearish momentum increase in strength for a while now. I mean, this was a huge run up. This is like pulling back the slingshot. And then this trend was powerful and sent the price straight down. Straight down. I'm going to open this back up into the 15 minute. And we know we have a pennant in there, right? But what it really looks like to me is more like a channel. And let me get a 50% level in there, because that really is going to show us what's up. I mean, this is what I think is more appropriate. I'm going to start deleting some stuff here because there's too many lines. When you get too many lines on a chart, you want to delete some. Just get rid of them, okay? Being able to read a chart is important. So there we go. Okay. You can see in blue I have this downward trend, right? And it starts at the peak of that run, and it's kind of defined by the height of that reversal, actually, right? So maybe right there. Yes, that's good. I got a nice clean touch right there, right where that first uptrend intersected that lower level of the downward channel. And you can see how the price is just, it's more or less spinning. That means it's coming above, going below, coming above, going below, hugging, you know, bouncing off of this downtrend. And you can see here that this uptrend support did actually slow that down and prevent the price from going down to that that medial line on that channel. But ultimately, at the end of the day, the price broke down below it. So if this channel remains intact, then the price has a long way to go, right? $16.30 and then $14. So two $2 drops next week for me. It looks like that could be in the cards. So I'm going to be trading puts accordingly. And if something does, if there is an unexpected bounce or reversal, I'll flip to calls. That's not a big deal for me. But I do expect this to be down. And if we see the price push back up above these trend lines, that's going to be a good reversal signal. The price needs to get out of this channel before we can start looking or even entertaining the idea of a technical reversal, because there is no technical basis for a reversal right now. I just do not see it, at least not through Blokowski's analysis. I'm gonna go ahead and zoom back out. I'm gonna go into my measured moves down, and as you can see, this measured move down is moving out of phase 2 and into phase 3, and that means that we're going to go challenge this uptrending support here. And if this inside, what do you call this, internal trend line, if this breaks, then I expect a new major low incoming very, very, very shortly. And given the momentum that the stock price was thrown up with, and then how hard that rejection was, I don't see any reason for the price to stop dropping until it reaches that new major low. And that's just the way I see it. Going out into the weekly time frame, that is a huge red candle. And that is a huge wick. This is incredible that anyone is looking for a reversal right now. Bullish reversal just bewilders me, because that just doesn't seem realistic at any point. It just looks like wishful thinking. So that's where I'm at. I'm gonna keep going with these day trades and charting my progress and calculating my RSI. And that's going to be kind of this irrefutable, objective way of looking at my analysis, because I'm going to be trading on my analysis, and it's also my skill as a day trader that I'm putting out there. So of course I'm a little nervous, right? Because I could completely mess it up, and that would be really discrediting for me, right? But overall, I am excited. I'm going to learn a lot. And if you do enjoy these videos, let me know, like, subscribe, whatever. I don't really care. This is just my journal, but I do like to engage in my community and on Discord and all that jazz. So that's what I have for this weekly video. Happy trading.